All right, we are back, Tony. We lost Finetta. We picked up Nick Fenton.
Good trade.
Good trade.
Good trade, bad trade, whatever. No, good trade. Hey, so Nick and Dave Johnson are the exact same age.
Oh, yeah?
One just had a better living, yeah. It hasn't partied quite as hard.
Nick's the...
I spent a lot of time at the spa.
That's right, that's right. Mud baths.
Yeah.
It's all in the mud bath.
Let me start today off with a
Hey,
gift.
this is our show. We'll tell you how you start.
I want to give you a nice gift I brought all the way from Kentucky.
What'd you bring?
It's a very exclusive.
Better be bourbon.
Very exclusive.
Did you bring bourbon?
Yes, I did.
You know, look at the kid brings it in a brown paper bag.
Gotta love him.
Of course, man.
Gotta love him.
This is called George T. Stagg. It's 142 proof. It's the strongest bourbon on the market. It comes out once a year. And
Seriously?
Yeah, it comes out once a year. It's part of Buffalo Trace's antique collection. And this is the toughest one to get.
Wow.
Over here to you, man.
I don't even think I've ever had good bourbon before.
Oh, that's
George T. Have you heard of
that
this?
is pretty amazing stuff.
I have not. I've heard of Stag, but I have not heard of that particular. I'm sure it's a single.
Try not to drink it all this afternoon, okay?
Well, it's customary in Kentucky to open the bottle and take a swig from the neck when somebody gives you a bottle of bourbon.
And that we're not doing right here.
I was hoping I'd catch you. It's not really customary.
It's not really nice.
I was hoping I'd catch you.
That didn't sound kosher to me.
It sounded kosher to me.
Yeah.
I was down with it.
Even bad Jews don't start drinking at 9:15 on expiration morning, okay?
No doubt.
One swig is not really drinking.
No, I understand.
So I have a favor to ask you in exchange. Well, not in exchange for a gift, just a favor.
Don't be giving gifts and asking for exchange. It's just, it's
You
not,
wait 24 hours before
It's
you
an
do
easy
that.
one. It's an easy one.
What you need?
How about a ride to Hilton, Chicago, so I can check out your 11 o'clock or what is it, 11:35?
11:35 show. Sure, you can go with me.
Cool.
But I'm not. I don't know if I'm driving, but maybe we'll see. We'll go.
Sounds good.
No worries. All
Beautiful.
right. Welcome, Nick. How was your trip to Chicago?
It was good.
Came up in the
Nice,
middle
smooth
of a.
flight.
Oh, you did?
Yeah.
Because it was nasty out here. So we're getting to the point now. We are butt up against resistance. Throw up the S&Ps, will you?
Oh, you're killing me.
Killing you.
Well, I had something else up there for Nick.
Oh, you did? I'm sorry.
That's okay.
Let's go down to a 3 month, whatever. Okay.
I got a 6 month.
Beautiful. So look where we are. We're right where everybody starts to freak out. 12:30-ish, a little over 12:30. We're actually 12:32 right now. I'm going to guess the world got, after yesterday's tape action, I'm guessing that most traders got caught short yesterday. I don't think that many people respected the power of the expiration unwind.
Sure.
And because we haven't seen it for a couple of real cycles, October tends to be always one of the strongest cycles. You have to respect that unwind of index arbitrage. What you're seeing right now is just the unwind happened on the opening. Now what you're seeing is people not being able to get their shorts back.
Exactly.
They'll make up a million stories about how something's going on somewhere in the world, But the reality is we're kind of breaking out a little here. So, Nick, what are you writing about?
My whole thing is go with the proven move until it's unproven. In this case, we're still in the range. Granted, we're at the top of the range. And it looks like it's trying to break out, and it's making a very respectable effort. Right here, I'd be more prone from a risk board perspective to put on a conservatively bearish spread. And if I see two consecutive closes above around 1225, 1230 range in the S&P, then I'd be more prone to get into a bullish spread or put on more bullish positioning. So at this point,
no argument.
No argument.
Yeah, at this point, it's still unproven as far as breaking above that resistance. The proven move is that it sells off from here. Granted, we are at a little bit higher highs, and we've seen some higher lows here, but I still think the better reward to risk play is to potentially play, a conservative or, in this case, a more aggressive, buying a put spread.
So Tony and I can't speak for Tony, but I'll tell you. So I'm a bull, and I think they're going higher. My first trade today is to sell them right here.
Yeah. Well, see, I think they're going higher as well, but I think from a reward to risk perspective, you have to be on the short side.
Okay,
here.
I'm agreeing with you, right? Just I'm talking about like so short term that like in 15 minutes or an hour and a half, I could be
can't wait to cover them.
I can't wait to cover. You're right. In other words, I'm not talking about a trade other than just like a little short term scalp.
Sure.
And that's it's a stupid scalp in the sense that they haven't sold off 1 penny yet today from anywhere. like we're talking about potentially trying to get him in a couple dollars lower.
I have not made one trade in the email.
No, I haven't gotten filled yet either. But right here, my level is like 1336. 1337. I really want them to get up there because I want them to push these shorts, as hard as they can. Then try to bring them back maybe at lunchtime for a little bit, and then I think they go higher. I have this theory, Nick, that everybody's underinvested, that everybody's out of this market. And again, I'm speaking. Let me talk about my position for just 1 second because I want people to make more sense when I say I'm short here. I'm long every financial stock out there. I'm short 1 million bonds. So I'm a big bond position. So everything works in my favor.
Not literally 1 million, but a lot.
Right.
A lot.
But as the market goes higher here and bonds go lower and financials go higher, I have room to play.
Yes. Okay.
I had to explain that because if I had no positions on here, I wouldn't be getting short.
So at 11:30, you have a speaking engagement at the Hilton. Would you still keep a position on if you get filled in the E-minis on the short side?
Yeah, I'm always watching. Dude, I walk around. I
just want to make that point to everybody.
Sure.
I just want people to realize you don't have to email me or text me in the car, Mr. Tony, to tell me that, okay, S&P's dropped down $3, right? I know what's going on, right? I have different...
Okay, Vanetta Jr.
I have different places in Chicago where I even know where I can't get my 3G. Okay, I'll drive down Michigan
Avenue. By the way,
Avenue.
you can't get it in the basement of the Hilton.
It's the worst goddamn facility.
Yeah, I was just going to say that. I was having an awful time yesterday,
I was trying to make a trade there yesterday when I was there. You
I
cannot
hate that building. It's 4,000 years old. They put
like
the damn shows in the basement. You're right. And
it's impossible.
It is, especially if you have AT&T.
Yeah, so, if it does get up to that 1236 range, if I see 2 consecutive closes, like I said, over 1230, 1225, I'm definitely going to position bullish. But for now, got to stay bearish. You also have that 200-day EMA above it, which could potentially provide some resistance.
And you are very like what you just talked about is, but you haven't been long up to this point. Have you or have you not?
Oh yeah, I was long off the base
Good.
support for sure.
Good.
And I was actually I was bullish volatility.
Good.
Or bullish volatility at this top of the range, which I just exited yesterday, which happens to be a very good move because we're about 32 and a half in the VIX.
You got so lucky because I hate that move. I didn't like that trade. But the fun thing is a lot of people, so exclude Nick, a lot of people are just thinking now it's time to get long. Doesn't that drive you crazy?
Yes.
Like when they were bottom fishing around and they looked ugly as hell, we're sitting here like, just close your eyes and you're closing your eyes. Up here now, I start to get
easy.
It's easier for me there.
Yes,
than it is
for the
here.
public, it's not easy.
I know
because that's how they've been trained.
I'm in the 59.61 bear call spread in the Qs right now, which I really like because the Qs are very close to their all-time highs at this point. And you guys have talked about the mean,
not all-time highs, but
the mean reversion
close
play. Close to their recent multi-year highs.
Mm-hmm. Yeah.
And you guys have talked about the mean reversion play, how the Qs have outpaced S&P and Dow.
Well, we're going to talk about that in our good trade, bad trade segments. Actually, we think that other parts of this market are going to outperform the Nasdaq going into the future of this move.
Sure.
And I have a lot of reasons behind that. And I have a bunch of different trades for good trade, bad trade. So I'm kind of like all fired up about it because I just wanted to see what it's hard when you come in the morning and everything's basically unchanged. And the next thing you know, they're up 23 points. That's 2%. So the whole move you're looking for over the next 2 weeks just happened while you're talking.
Right.
Yeah, I agree with that from a longer term perspective. I think short term we're going to see a convergence, between the Qs and the S&P. But longer term, I think it's going to more and so play out as far as the Qs being outpaced by things like financials.
So for me here, I want to get back to this because I think it's so important to discuss. We talked this morning about I liked the play in volatility from a risk reward side better than I liked the play in the S&Ps. And vol's down and just to put it in a numbers perspective, vol's down almost 10% today. Okay, and the S&Ps are up, 2%. And that's kind of what I was referring to this morning as where I thought the pot odds were. And now, does it become difficult to trade when bonds are down a half, 3/4 of a point and you want to get short them? The VIX is down 10% and you want to get short it. S&Ps are up 2% and you want to get long them? You better believe it does. It gets a lot dicier.
Let me ask you this. Why do you like, from a reward to risk perspective, why do you like the VIX better from a sell side than you do the S&Ps better from a sell side?
Why do I like the VIX?
You're just talking about I think thinking downside volatility pressure. I
think the VIX has a potential to have a significant decline of, let's say, 30 to 40% from here, or 20 to 40% from here. Whereas I think the S&Ps have the potential to go up 3, 5, 7%.
Makes sense.
That's the difference.
Makes sense.
And I'm a trader that likes to focus on what I perceive to be kind of pot odds. Okay. Hey, JR, do me a favor. Will you bring in my little prop? I did this last night. I want to show you, Nick, because I did it last night at my show, and I want to give people another little example here while you're here today to have a little fun with the bond market. But
speaking of JR, I had drinks with him last night at Will's, and we were watching the end of the Rangers game.
Was he about to commit suicide?
I've got some buddies that are diehard UK fans, but they've got nothing on this guy.
Yeah,
he was screaming. He had people looking at it. It was hilarious.
Dedicated UK fans. What the hell is a UK fan? The University of Kentucky,
man.
That's a team?
Yeah, basketball? Oh, it's diehard.
Beautiful. Thank you, sir. Hey, and you got lucky last night, JR.
Got lucky, I think.
That was
better
pretty...
to be lucky than good sometimes. That's okay.
Rangers. Way better. Okay. I have a little demo while you're here. I did this last night, Nick, but I want to, so you're very aware of what I'm about to go in here. There's a, Tony and I like to talk all the time about pot odds, and we like to
mentioned it a few times.
Yeah, and we like to talk about, what we perceive to be opportunity, things like this. Two glasses of water. I'm going to tell you that that the greatest percentage of global wealth right now is in debt-related instruments, because the greatest amount of financial information that we're all able to disseminate is all about fear. Greece going to take down the rest of the world. Yeah. Ireland take down the rest of the world somehow. Remember that one analyst that one time we read the thing on here? Greatest play in the world to invest in, Ireland. Well,
buy Ireland stocks.
Buy Ireland, sell the rest of the world. Dude, that was the absolute high tech. I mean, Greece, Ireland, Portugal, Spain. I mean, in fairness, I don't even lose I don't even lose a second of sleep, whatever it is, over that situation. But just talking about, everybody likes to sell the concept of fear. So all the money has moved into precious metals, which it's now moved out of, and into debt instruments, which it hasn't moved out of yet. Bonds are down a little bit.
For sure.
What?
It's in the process for sure.
A little bit. It's just starting to roll over. Just beginning the rollover process. Anyway, right here you have these two full glasses represent, to me, the bond market. I use this as the 30-year bond, Tony. Here. I'll make this easy for you.
This is awesome. I like this.
I told him I'm just going to throw stuff on his desk one day and see if he uses it as a prop. I'm sure he will. Yesterday, he was using his iPad as a cloud.
The white M&M, I don't know what happens when you drop M&Ms in water. Does it happen like those, what are those things, Mentos?
No, that pop up. No.
Where you put in a Coke
Mentos
bottle?
and Diet Coke?
No,
Yeah.
no.
That is the 30-year bond,
It's not
the
going to
white
melt
one.
because they don't melt in your hands. It's not going to melt there.
Of course not.
30-year bond, white. 10-year note, red. Where do you go? Where do you put money? You're China. You got all this money. You've been buying U.S. securities, okay? You're Gaddafi. You got all this money. You've been buying U.S. debt instruments. You're someplace. Everybody's got a lot of money. There's a lot of money out there.
Oh, yeah, there is.
Banks are hoarding. Nobody's loaning any money. Right. Everybody's just hoarding assets. Apple's got $85 billion, okay, whatever the number is. There's a lot of money out there. Companies shouldn't have $85 billion. Sitting
as a war chest.
That's amazing.
Sitting as a war chest.
I mean, we're talking about 15 years ago.
They couldn't borrow $150 million.
Right.
They got $85 billion.
That's right. Okay, you're talking about massive amounts of money. China has nowhere to put their money in China, so they have to buy bonds over here. This is the 30-year bond. This is the 10-year note. This is white. This is red. These are let's call these fully, the glasses are almost full, right? At some point, when everything starts to heat up, that's a drying up of liquidity. That's actually the trend that we're starting to see now. We're starting to see, and the stock market is proving it, and the financials are proving it as well. We're starting to see a money flow into things that are both perceived to be cheap and perceived to take advantage of lower interest rates. Higher interest rates. When this trend continues into instruments rotating out of long debt, which is some people say it's 70% of global wealth. Other people say it's 30 to 40%. I have no idea what the number is. But even if it's a third or 40% of the global wealth, picture this. It's fully priced because rates can't go any lower.
Sure.
Now, when this market turns, the only buyer is this. That's the U.S. government.
Please don't pour those 2 cups of water into one.
I'm not yet.
Okay.
The only buyer is this one cup. Now, here's what I can't figure out.
Somebody get us some champagne.
Yeah.
Here's what I can't figure out about this whole thing. If you've got 2 full cups of water, and the only buyer is this one big institution called the Fed.
Exactly.
How do you put 2 cups of water into 1 cup? How does this work? Tony, you're a statistical genius, a mathematical whiz.
Quant is the word.
How do these 2 cups of water fit into this 1 cup?
Very carefully.
Because as something turns, there's a way less buyers. There's all sellers.
That's right.
Okay? There's no buyers. There's all sellers. I'm being generous.
Well, what you have to do is you have to give me that bourbon he brought over that Nick was kind enough to bring us. Let me take a couple of swigs from now. We'll be able to fit that water in there. That's about the only way you're going to be able to do it.
That's 142.6 proof.
Here's
one swig and you're good.
Here's a 30-year bond. Here's a 10-year note. If we're lucky, there's 1 cup of buyers. Okay, my fear is when 40% of the global wealth realizes almost overnight, oh my God, I didn't realize I had principal risk. I thought this was a safety play.
Ugly.
You put your money in 10-year paper for 179 and you don't think there's principal risk? You put your money in 30-year paper for 2.65% and you don't think there's principal risk? And all of a sudden one day you wake up and you realize, oh my God, the buyer, which is only supposed to be around, according to the government, until 2012 or 2013,
right,
which they're telling you, oh my God, this glass is half full already.
If you don't put your water in there by 2012 and a half,
it's going to make a whole. It's going to make a mess.
The glass is big trouble.
In any
Lots of spillage going on.
In any case,
unless we're China. I mean,
this is a mess of massive proportions. It's a mess.
Yeah.
Okay, unless you think it's all going to be the same as it was in 2008 or whatever, or we're going to go into that. It's going to be a mess. There's nowhere for all this water to go because you've only got, at best, 1 buyer. Or one
big buyer.
One big buyer.
Yeah.
And what price does it have to get to attract people? It has to crash.
Yeah, that's a big time crash.
Okay, what price do you buy a 30-year bond? I mean, I know where I buy them because I'm short. But what price do you go long?
You're talking about a bond future.
Whatever. I'm just kidding.
Right.
But what price does the seller up here?
Significantly higher than 2.7% yield.
Okay, so what is it? Is it 5%? Are bonds? Is it 7%? Are bonds back to 100? My point is, there's the only people that buy at this point on the way when things get turned around
are the people that are short.
Are the people that are short. Okay, so then once you get me out of the way and Tony out of the way and Scott out of the way, okay, that's basically all the shorts. There's a few more. Then what happens? Then you got the U.S. government to back you up. They're not going to sit there and go, just sell them. I'll buy everything. They're going to basically work their way all the way down. They're smart too, and they know that there's nothing but sellers. The principal risk that's going to take place globally is going to be frightening. Now, there's one way to offset that principal risk. You go into things where higher interest rates will benefit that particular underlying. So now you understand why we're so bullish in, for example, in Japan, why we're so bullish in the financial stocks, because financial stocks are no longer loan mongers. That's why I talked about this morning. Exactly. They are now asset gatherers. And in the world of asset gathering, what happens is if you're losing principal here, you have to go somewhere else where you can gain principal based on this movement.
That's a powerful thesis for sure. And I have to agree 100%.
That scares me.
Yeah, I mean,
from a guy that drinks
I really do.
Stone cold 140 proof bourbon.
It makes perfect sense, and the charts are telling us that.
Full disclosure, you didn't have any this morning, right?
No, not yet. I'm gonna talk you guys into it after.
It's
we go to
amazing to me that everybody from first of all, there's 2 things about Kentucky, Louisville that I love. 1, everybody's super nice. 2, everybody drinks bourbon. Like I could never go out with a woman from Louisville because that scares me.
Under the table.
Scares me. Or would you be scared? Somebody says, I'll have a shot of bourbon. I'll take a bourbon on the rocks. I'm like,
this is a story with my wife, but yes.
You're too strong. We know that story. You've already told it.
It has to be a special occasion for my wife and my sister to drink bourbon. So not every woman in Kentucky.
Really?
Yeah.
But they still will drink bourbon.
Yeah, they will.
Okay. There's nobody in the Midwest.
The good stuff.
There's
Pappy
nobody.
And the Stag.
What?
The Pappy Van Winkle and the Stag, they'll drink that.
Really?
Yeah.
It's that much different.
Have you guys had Pappy Van Winkle yet?
No.
Oh, man. I know what I'm bringing next time.
No more good.
The only guys I hang out with from Louisville, they drink Maker's Mark like it's Diet Coke.
You mean Swan's never sent you a bottle of Pappy before?
No.
Wow.
Those bastards.
Andy, if you're seeing me right now, send this guy some Pappy. Come on.
I never had it. No, seriously.
Share the love, Andy.
You don't have,
Come on, Swan.
don't be wasting the good stuff on me, okay? I wouldn't appreciate it. All right, Nick, thank you. So let's give a little plug out. We always have so much fun with Nick's firm, and you've actually done quite well in our superstore.
Yes, it's been great.
Yeah,
he always has a very good offer in there.
A lot of people like his product and newsletter and stuff. So it's TickerTank.
Ticker.
It's TickerTank.
I almost made a shirt that said it's TickerTank, and then on the back, not TickerTank.
TickerTank. It's TickerTank, right? It's tank ticker. What is it?
It's TickerTank.
I know.
He's been up. It's been up there.
I know. And he's actually done quite well in there with TickerTank. But listen, we have fun by mispronouncing the name. When Tony mispronounces everything, it's actually been good for you.
Yeah. Let me ask you one question real quick.
Sure.
So I've been long BAC and selling calls against it. I actually sold some puts against it also to lower my cost basis.
Good for you.
Right now, the AUK8s are expiring worthless, and I want to look into selling some more calls against it. But the NOV 7.5s aren't exactly.
There'll be no 7s on Monday.
Will there? Okay.
Yeah. Just wait till Monday. There'll be no 7s.
Beautiful.
You and 1,000 other people have asked the same question. I would wait for the NOV 7s on Monday.
Beautiful.
Yeah, I actually sold NOV 7.5s because I was short some 8s. And so I sold the NOV 7.5 because that's all there was. But I'm going to buy those back on Monday and sell out NOV 7s.
Cool.
Yeah, we can have this discussion there, but with 100%, with almost 100% implied volatility in Bank of America,
it's a no-brainer.
The daily return in there is about 1% if you sell puts, 1% a day still because of the risk premium. And the covered returns now, I started buying Bank of America. My average price is just under $8. I got my average price down pretty close now to I want to say in the 5.5 range. So this concept
just by placing the overlay,
not actively trading it, just 1-to-1. Just keep selling as much garbage as you can sell in there.
Yeah, financials is a land of opportunity from an implied volatility perspective. I think it's the best area you can possibly be concentrating on right now.
Well, you said as good as I can. Beautiful.
I think we got another little area that a customer has sent to us, so we'll take a look at it maybe on Good Trade Bad Trade.
We got to go. We got to Nick. Thanks for everything for coming in. The beautiful bottle.
Hey,
the examples.
Nick from
everything.
TickerTank, appreciate it.
TickerTank.
You said it right.
This is just so I can say it again tomorrow.
This is a special moment.
You've been listening to Get